What is up, y'all? So today I want to do something a little bit special. What I want to do is I want to make this video harder for you guys. I want to give you guys a step up. And I really mean this. I want to give you guys a step up. So what we're going to do today is we are going to put things together. Now, how exactly we're going to put things together is going to be like this. Okay, so we've learned about what? Fair value gaps, breakup structures. We've learned about inversing fair value gaps, accepting fair value gaps, rejecting fair value gaps. We've learned about liquidity sweeps. We've learned about trends. We've learned about time frames. I think that's pretty much what we've learned about. Now, if I'm missing something, that doesn't matter because those things are clearly not as important as the things I was talking about. But before I get into other confluences, I want you guys to really get some things down in your mind. I want you guys to actually do some hard things. So what we're going to do is put some things together. Okay? And pretty much for every example I give, I'll be on market open because there is usually just the best price every single time, okay? So, with that being said, guys, there's no need to necessarily have your charts out in these videos until the end when I give you homework for you to do yourself. So, if you want to have the chart out to kind of see what's going on, you can 100% do that. But if not, then that's also okay. So, with this being said, guys, let's put some things together. Okay? So, what we're going to do first is we're going to find a sweep. We're going to find let's just keep it simple. Okay? We're going to find a 5-minute sweep. In fact, actually, how it really is, I might as well just keep it real with y'all, right? Let's just keep it simple. Might not be able to find a 1-hour sweep. So yes, we're going to be looking for a 5-minute sweep. Okay? And let's keep it very simple. It could be a small sweep. Okay, so we right here have what, guys? We have a bunch of highs and lows just right here. Now what happens? Price moves down. Eventually it moves up. And in fact, it actually moves up a tick. Just about one tick over these highs. So what happens is we sweep low time frame liquidity. Now, basically, right? Okay, basically some could say this is SMT because it fucking is. Okay? It's definitely SMT. Okay, it's definitely SMT. It's SMT. It's 5-minute SMT, okay? Now, I haven't taught you guys about that, so it doesn't matter. Okay? Basically, here we have a sweep. We have price making a bunch of highs, or just one high. You could say it's one high. It doesn't have to be all of this. But we really do have a conglomerate of highs separating these candles from each other, right? So, basically, a bit more than a few candles away later, we come back up and sweep all of this. So now what we're going to do is, since we have our first big confluence on S&P, we're going to scroll down to the lower time frame. And I haven't told you exactly how to trade yet because there's many ways you can do this. There's many orders. But for this time, I'm going to have you guys find a big confluence, basically the sweep. And then we'll find some smaller confluences with a breakup structure of some sort at the end. That's how I'm going to go with this today, okay? There's a million ways to trade, but this is the one we're doing today. Also, anybody else? I like coffee a lot, but I've got so used to having coffee where I'm almost... What's the word? I'm almost... I forget the word, but I won't have coffee. I literally will not have coffee if it's lukewarm or warm. It has to be hot, just because it tastes better. I'm becoming like a fucking princess. Okay, so obviously a NASDAQ does not have this low time frame point that we could sweep even. All the points are lower than the high point we have currently. So we will be sticking with S&P. We scrolled down from the 5 to the 1 because we have a sweep. But instead, I'm actually going to see, let's just add another confluence, right? We have a 5-minute sweep, right? But now I want to add a 3-minute flow. I want to add some 3-minute flow. So we've closed on the 3-minute candle. Now, I'm just kind of, I guess, I don't want to make this stupid. No, we don't need 3-minute flow. I'm sorry, guys. Don't listen to me. I'm trying to make this unique when that would make it stupid. Okay, so we have the 5-minute sweep. And usually we never use 5-minute sweeps. And we sweep right at this point. So this point sweeps this point. Okay, and a conglomerate of these highs too. So what are we looking for? Now, if you're new to trading, you might understand, but if you're not new, or if you're brand new and you're not a little bit experienced, you might understand that, okay, we're going to be looking for a retracement of some sort and a break of structure of some sort, or closing below something of some sort. Okay? That's correct. But since most of you guys are new here, I'm going to explain this very carefully. So when price touches this 5-minute high, do you think it's going to dip down right away? Do you think it's just going to go down right away, or do you think there's going to be some price moving down and then price moving up again to rebalance and then price moving back down? That's the more probable thing. And once that happens, and then we have confirmation that it's going back down, that makes a trade potential so probable that it's more likely for us to win if we do it correctly, which makes day trading a lower risk, higher reward type thing. Now you guys understand. So, what are we retracing into? Sometimes a fair value gap, or sometimes a retracement on the 1 minute, so on the lower time frame, can actually make a 3-minute up and down candle, which can make lower highs or higher lows, which we can use to protect our trade, which can also be very useful. And I'll talk about those in other videos. But right here, we don't really have a retrace or a fair value gap to retrace into. So we'll go to a lower time frame. Now, actually, I can't do this because you guys don't have the 30-second. But let's just say, okay, we come down. Okay. And then we come up and we create this high, this lower high, right? It's lower than this high, so it's called a lower high. Then we come down. Okay. Now we're down here. What happens? We then come up, actually, kind of sweeping. It's kind of funny. We kind of sweep these very low time frame highs. Now, I would never place a trade off this, but just with the putting things together video, we can use this. We're putting things together. So we have a high confluence. We have a quality big confluence, the sweep. Then we have a retrace, basically sweeping some lower time frame highs. And now we're also going to add with that a break of structure. Now, where is the nearest break of structure after we sweep these highs? Where is the nearest break of structure? Since we're on a downtrend, technically, some could say, oh, you don't need a break of structure. And you could be right. Like right here, we have an inverse. We don't necessarily need a candle break of structure. We could just, be fine with placing after this candle closes below this bullish fair value gap, so inversing. But realistically, after everything, we would want a break of structure for more confirmation, so a second break of structure. Now, where is that second break of structure? Okay. Obviously, the downtrend started okay. So right here, we have an uptrend. Okay. Boom. We have an uptrend. Okay. And then where's the downtrend? Where does the downtrend start? Starts right here. Not because of this candle, but because of this candle. And since this candle closed inside of this wicks, you might say, well, isn't it not a break of structure? Well, it is, because this candle is also red. If this candle was green, it'd be another point. So we technically break structure right here. It's not the best break of structure though, and I'll teach about that in other videos on how there's better break of structures. But now we have a retrace and we're looking for a new one. So where is that new one? It's right underneath these lows, right? So right here. So not only does that candle break structure, but it also inverses a fair value gap. And why is that inverse? It's because this is bullish. If this was bearish, it would be exception, not rejection. So we wouldn't really count it as a break of structure. We'd count it as just more confirmation. We want price to actually prove that it's moving to the opposite side. Okay? Which is why we're looking for a break of structure. So we have a break of structure candle-wise and a break of structure through an inversion of a fair value gap. So now we'll place our trade. Since we have 1 confluence, 2 confluence, the retrace, and 3 confluence, the break of structure, but with an extra break of structure, we'll put the trade. Now, I'll talk about where to put stop losses eventually, but we'll put our stop loss at this point because we have a protected high. And I'll put a break-even point right here at this 1-minute low. And then I'll target a 5-minute low. So I'll just target this 5-minute fair value gap that is very small right here. Now what happens? Price obviously moves everywhere. We hit break-even zone. Do we go back up to break-even? No, we keep going down. So we stayed in the trade. So I'll do another one of these, and then I want you guys to do this yourself twice. And I'll make this next one very simple for you guys. You guys can really understand this. This was in depth, might be hard. The next one I'll make it simple, okay? So let's find one on NASDAQ so I can keep this right to the side in case you do, for some reason, want to see it. Okay, so we will be going to a different chart or a different day. Okay, we'll start with the 5-minute. We will basically, I want to see something that's clear. I am going to show you things that are clear. Okay, so we're on the 5-minute on this AM session, okay? And mark it real quick. We open here, and then we what? What's this, guys? Low time frame, lower liquidity, buy side liquidity. Where's the lowest point on that area? Right? The lowest point in this whole area, the lowest point that this point had swept. Where is that? Well, it's not here because we kept going lower. It's here because we didn't come down to here, obviously. So it's going to be right here. And in fact, these might be equal. Nope. So we have our sweep, okay, at our point. Now we're going to go to the 1 minute, and we are going to find an entry. Okay. So what are we looking for? In this video specifically, we're looking for a retracement with a break of structure, okay? So we sweep right at this candle. This candle sweeps, okay? Now we're looking for a retracement, even though we get a break of structure right here. And in inverse, what are we missing? A retrace. Because if we place off of this without a retrace, the retrace that's possible could go all the way down here, stop us out, or we might not even have a retrace and it might just move down and then retrace back down, and then we'll be stopped out way before that. So that's why we wait for a retrace before we place. If that makes sense. So we are waiting for a retrace, and since we have a break of structure right here after the sweep, unlike this time we had a break of structure prior to the sweep, or it wasn't the best break of structure. I'm actually going to be honest. You want a break of structure that closes above or below any wicks. So I really am sorry about making that confusing. We already have a break of structure here. It's above the wicks, unlike this one, right? Unlike this. We retrace down into what? A fair value gap. Even though we inversed it, we have a big confluence. This shouldn't matter. Then we come back over it. What do? Well, we don't break structure, but in this case, it looks like we could just place right here. And yes, you technically could. We have a break of structure here. Now, I usually don't do this, but sometimes you can. But since we inverse to the downside, I do want a little extra confluence, if this makes sense. So I'm going to wait for another break of structure. And before we have a new break of structure, we inverse a fair value gap at the same time. Okay, and we do what? Break structure. So what are we doing on this candle? We're placing a long, not a short. Where are we putting our stop loss? You wouldn't know. I'll talk about this in a different video. We are putting the stop loss a little bit more underneath this point because we want to be stopped out when our trade's invalid. Okay, we do not care about going past this. We don't think we will. If it does, then our trade sucks. Maybe we get a re-entry. So stop loss here, placement here. I will put our break-even point at these 1 minute lows or 1 minute highs, and I will target a 5 minute position once I go freaking find my area again. So nice to meet you. What's a pretty smart point to target? I'd say these freaking highs right here. These ones, they're the closest. Or actually, we have brick. We have a 5 minute fair value gap. That's kind of sketchy, but you know what? Let's see. Let's see what's going on. Let's see if we can make a 1-to-1 in between that 1 minute or that 5 minute fair value gap on the 1 minute. And I will teach you guys about figuring out this for yourself. So we would have... No. I think we're going to go for it. Fuck this 5 minute point. And actually, do I care about this point? No. This is going to be the break-even point, that 5 minute point. So what happens here? we make a 1 to 1.78. We touch break even. Do we come down to break even? No. And we keep going to the point I was targeting. In fact, we went way higher. What did we do for this trade, though? We put 3 things together, guys. We put a sweep. We put a retrace with an exception. And we put a inversion with a break of structure. Now, it would have just only needed to be 3 things, but instead we have what? Sweep. We have a retrace with an exception, okay, inversion, and a break of structure. So no wonder why price just moved up, right? We combined many quality market moving things together to make a very good trade. I really hope this makes a little bit of sense. And what I want you guys to do for homework today is I want you guys to find 2 things like this. And if you've had the indicator, and I'll say it again, if you don't have it, go here, search up this, make sure it's by Trade for Op, download this, go to the New York session opens, okay? And then you're going to go to replay, and you're going to select the bar after the green box. So when you're switching time frames, you don't have to scroll like I was doing. And then find a trade with a sweep on the 5-minute or the 4-minute or the 3. In fact, or the 1. If you see, like, for example, look at these highs. Okay, they're far away from any place else. Price comes back up, sweeps them. You can find a trade off that. Okay? And if you end up finding a sweep, but the trade doesn't go its way, just figure out and find how many confluences could have been, right? We have an inverse, and then we have a retrace into this, and then it just keeps going up, right? So we don't really have a break of structure to the downside. It keeps just going up. So try to find like as much as you can that trade, and at least for your homework, find 1 successful 3 confluence trade. That makes sense. Okay? So, for example, just a very low time frame sweep. Okay? You got to retrace into this fair value gap. And since we broke over these levels right here and broke structure, and we never inversed this at all, you could have literally just placed your trade off of the candle that came in. Well, I guess there's a second break of structure, right, guys? Just place your trade, target these highs, put your stops below the candle that made the fair value. You don't have to place this thing. You just kind of have to. You don't have to place this correctly. Just play it out just a little bit. Maybe even see how far you could have gone before losing a trade, like in this scenario. Oh my gosh. Look at that, guys. Okay. I really do hope this makes sense. And if it doesn't make sense completely, try your best. And in the next upcoming videos, things will make far more sense. And remember where you started. You would have no fucking clue what you're currently doing when you started. But now you finally have a clue. Okay? So with that being said, guys, I will see y'all in the next video. Peace out. I hope my camera was not in the way. And if it was, it won't next time. Deuces, y'all. Peace.